Welcome to the Bogart Effect, a wealthy wisdom podcast. Please see important disclosure information at the end of the presentation.
So risk, though, in this space is really nuanced, I would say. So we got to be careful. You know, the number one goal here, what are we trying to achieve? We're trying to achieve excess returns. And excess returns relative to what? Relative to the market. And what do we know as a market? The proxy is the S&P 500, really. So
You just answered my next three questions, by the way.
Oh, fantastic. Here we go. So S&P 500, annualizes at 10% since inception. And when we're talking about dealing with private equity, you're talking about, call it 15% give or take. So doing better than the S&P. The other group that you have here is private credit. So private credit, you're looking at about 10%, so matching the S&P, but let's remember that you're doing it with debt. So about half the risk in that situation. Now, the other aspect of this that we got to pay attention to is, oftentimes you see folks say there's less drawdown in some of these spaces, or they're not as volatile, which is generally true, but there's a nuance called market to market in our industry, right? So this is how often things are valued.
Or priced.
Yeah, exactly. How often things are priced. And as you're doing this, how often can you look at the computers and all the assets that a company owns? You can't do that real time with alts. So you don't see that pricing as often. So by design, it feels as though the volatility is not there, but don't mistake it. There is risk. And it just depends on which flavor of these asset classes you're doing. Now, the other thing I would say is the return dispersion is huge in this space. Your top quartile names can really deliver solid returns. If we're using private equity, for example, you can see 15 and even higher, closer to 20 plus.
Sorry, when you say returns in this space, are you talking about private credit, or are you going back to a broader category of alts?
Just general in alts. Yes, thank you. So in alts in general, because even within private credit or within private equity or private real estate, point is that in this entire private market space, you're going to have that the top performers are really knocking it out the park. And then your bottom performers, it can vary, right? So the due diligence is crucial.
Well, and I think it's important to align what is the objective of the investor. Because you're right, alts as a category is very broad-based. It's all-encompassing. The previous presentation by Bogart Wealth was intended for general information purposes only. No portion of the presentation serves as the receipt of or as a substitute for personalized investment advice from Bogart Wealth or any other investment professional of your choosing. Different types of investments involve varying degrees of risk, and it should not be assumed that future performance of any specific investment or investment strategy or any other non-investment related or planning services, discussion, or content will be profitable, be suitable for your portfolio or individual situation, or prove successful. Neither Bogart Wealth's investment advisor registration status nor any amount of prior experience or success should be construed that a certain level of results or satisfaction will be achieved if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Bogart Wealth is neither a law firm nor accounting firm, and no portion of its services shall be construed as legal or accounting advice. No portion of the podcast content should be construed by a client or prospective client as a guarantee that he or she will experience a certain level of results if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Copies of Bogart Wealth's current written disclosure brochure and Form CRS discussing our advisory services and fees are available upon request or at www.bogartwealth.com.